everybody from Wall Street to Main Street is trying to navigate the growing economic risks created by the war with Iran. As far as the markets are concerned, all three finished higher for the day, even as oil prices resumed their climb, with Brent crude finishing above the $100 mark. If you have been watching this show, then you already know what it means for your wallet. Higher oil prices translate to higher prices for gas, diesel, and even jet fuel, all the things that keep our economy, not just our economy, but the global economy humming along. But earlier today, I must share this with you. White House economic advisor Kevin Hassett laid out how the administration sees things if the war is prolonged. Watch this.
The fact is that the U.S. economy is fundamentally sound, and that if it were to be extended, it wouldn't really disrupt the U.S. economy very much at all. It would hurt consumers, and we'd have to think about, if that continued, what we would have to do about that. But that's like really the last of our concerns right now, because we're very confident that this thing is going ahead of schedule.
The last of our concerns. With me now, Dan Nathan, CNBC contributor and co-host of the podcast Risk Reversal, and Nasha Stern, former Treasury Secretary and Yale Law professor. Okay, we are now in the third week of the war. Kevin Hassett says the war would not disrupt the economy very much at all. But for fact's sake, it already has. Walk outside and look at gas prices. We have had, Dan, farmer after farmer are on this network warning what increased diesel prices do for their tractors, what increased fertilizer prices do. And not to mention, there's loads of businesses that have nothing to do with the Strait of Hormuz, but they're in this moment where they're like, I'm not hiring, I'm not growing, we're at war, I don't know what's ahead. So what is Kevin Hassett talking about?
Well, I mean, fundamentally sound, possibly. I mean, if you're looking at it through the lens of someone who owns stocks, right? If you think about the stock market, that sort of thing, and we know that those who own equities are feeling a bit better about the economy in general, but all those things that you just mentioned, right? If you have higher jet fuel, you're going to have higher prices for tickets, right? So the point here, and we've been talking about this going back to last April, when companies have higher input costs, and you just named a whole host of them, they're going to pass them through to consumers, right? And it's usually the consumers that can kind of least deal with those increased prices. You just mentioned, gas at the pump. It's $3.80 right now on average across the country. It was $2.90 just a month ago, right? And if you think about if that is on a prolonged basis, you're going to take off 100, maybe $200 billion of purchasing power. And again, it goes back to this whole notion of this K-shaped economy, right? The lower arm is a lower earning consumer. Again, this hits them really hard. In the upper arm, you have a consumer that's okay. They're dealing with this right now. And at some point, you might see some degradation in that spending, but 2/3 of our GDP, right, of our economic activity comes from consumer spending. So when you talk about what Hassett's saying, you do run the risk of an economy that's about to turn, especially given what we've seen in the labor market over the last couple of months.
Natasha, let's go global, because we're seeing higher gas prices here. But take yourself across South Asia. We already have some countries that are beginning to ration energy, close school, shorten work weeks. Axios is calling this an economic world war. What is your reaction to that description?
I mean, something that's so striking about what is happening at this moment is that it just feels that there are layers of uncertainty with respect to the sort of tectonic plates of the economy. You're certainly seeing that with respect to the implications of this war on things like energy prices. But to your point, Steph, it's not just energy. It's 1/3 of the world's fertilizer supply is tied up in the Strait of Hormuz. That means food prices. That means prices for essentially everything that consumers here in the United States, but not just in the United States, are consuming. And then you're also having these sort of simultaneous massive shifts with respect to our relationship with our allies and our adversaries with respect to the trade wars that have been launched by this administration that put tariff rates at levels we haven't seen in the last century, that also have upward pressure on prices. And you're also, by the way, having a set of uncertainties that relate to the nature of what's happening in the labor market and what might be happening as a result of this artificial intelligence boom that we're seeing. And so all of those uncertainties make you a little bit nervous about the global economy. And really, that nervousness is being exacerbated by policy choices that this administration are making unilaterally in ways that don't reflect what is in the best interest of the American consumer, but also what is in the best interest of the global economy.
When geopolitical analysts look at all of this and the administration, Natasha, keeps saying we're ahead of schedule, do we have any window into what that schedule is? Because to the best of my knowledge, they haven't given any sort of game plan, and we're 3 weeks in.
You know, what's so interesting is it feels like now eons ago, but remember at the State of the Union, in response to concerns that the American people are feeling with respect to affordability as it relates to things like food prices or consumer goods prices that are impacted by the tariffs, the president said, you know, what an area where you're seeing prices come down really substantially is you're seeing gas prices go down 6%. He traveled to Texas to make that energy independence speech that week in the response to the State of the Union. And just a few days later, you see this war launch with respect to the Middle East that is actually tying up and pushing against exactly those types of positive supplies for consumers that the administration was really banking on. And whenever they're asked, you know, what is the sort of end game here? What is the path? You see a mix of answers depending on who the audience is. Is it that the war is about to end? Is it that the American consumer can actually bear the pain because there's some sort of positive implications of this type of geopolitical uncertainty that sit on the horizon? And so all that is a long way of saying, Steph, I don't have answers for you because I don't think that the administration has answers that they're reflecting to the American people, both about why we are in this particular conflict, but also about what the end game is.
Dan, the U.S. economy is resilient. You just laid out if you own stocks, if you own assets, you're feeling pretty good. But when you have this kind of stress, even strong economies can start to buckle. And you've got inflation, you've got tariffs, and now you've got the war. So for people who are not owners of assets, can they handle this stress?
Well, in the last few weeks, we've had major job cuts at very big companies, right? So Meta, which is the Facebook, just announced 20%.
My mom calls it the Facebook.
Yeah, so do we, right? 20% of their workforce. That's about 16,000. Chevron, the ones who are in Venezuela, right? They're pumping all that oil. I mean, they just announced 15 to 20% job cuts. You have Amazon cutting 16,000. A couple Block, this company, the Cash App, 40% of their workforce they're cutting. 40%. They announced 4-0. They announced it, last week. So we keep seeing these white collar jobs being cut. And so we just talked about a higher end, higher earning consumer. Those jobs are kind of going away right now. Now, you can explain it away. You say AI is going to be taking the job. I'm not so sure about that. I think these companies, and what Natasha just said about the uncertainty, we have this going back, again, a year from the tariffs. Now you throw this on. This is like a multi-pronged sort of thing where if you're like corporate America, you want to be really careful right now. So, we used to say it was a no hire, no fire. Now it's becoming, a firing sort of situation. And I think the AI is the thing that causes no hire. So when you talk about resiliency in an economy, right, we have, unemployment at 4.4%. On average, over the last year, we have averaged 5,000 jobs gained a month. That's like the lowest that we've seen in 20 years. So the employment thing is a problem. GDP growth, Q4, we had a big miss right now. So 2025 GDP growth was 2.2%. In 2024, this is, Biden's last year, right? 2.8%. So we're seeing slower growth. We're seeing inflation, right, is coming down, but it's still well above the Fed's 2% target. I think we're like 2.5 or something like that. And if you think everything that we've just talked about is going to be inflation dampening, that's just not happening, right? So you take those three things together and you talk about a resilient economy and you say to yourself, we could be on the precipice. I don't know if a recession here, the globe is going to get weaker before we do, but ultimately we would likely follow the rest of the world.
Natasha, new topic before we go. TSA workers just missed their first full paycheck due to the partial government shutdown. 10 airline CEOs sent an open letter to Congress urging them to pay those workers during this shutdown, saying, quote, the stakes are especially high. This has been going on for a month. On one level, should we have not heard from the airline CEOs before now? And on the other, what the heck's going to happen here?
I mean, your guess is as good as mine, Steph, and I don't know if either of you have tried to travel of recent, but what you're hearing and what you're experiencing on the ground is that there are wait times that are ranging from 2 to 4 hours, depending on what airport you're at, with respect to security. And the implications of this are just going to continue to grow as more and more workers miss those paychecks and decide that it doesn't really make that much sense for them to show up to work. And the nature of these types of stresses, again, if you think about it from these workers and think about it with respect to this particular resolution of how this funding game is going to play out in Washington, that's one set of issues. But if you also think about it from the perspective of travelers who are approaching spring break and trying to get to destinations, they're facing higher ticket costs as a result of those jet fuel increases, as a result of this war. They're facing higher security lines as a result of the nature of the political chaos in Washington with respect to these funding choices. And they're also in a situation where once they get to their destination, as a result of these tariffs, the cost of essentially everything that they're trying to consume are rising. And so all that makes for a really difficult story with respect to economic strength at a moment when a lot of good is happening in the American economy. But all of this is about policy mistakes that we are making in ways that are dampening those potential growth opportunities and strike me as quite problematic.